Welcome, everyone, to another edition of the Tony Sirianni podcast. I'm very pleased to have my friend Janelle Jackson, who is the principal head of banking institutional group at Vanguard. Thanks for being here, Janelle.
Thanks for having me, Tony.
You're welcome. And I just want to remark also that that's her real background. She's not behind this. She's not making a fake background. It's pretty cool.
This is real.
Yeah, that's real stuff. So tell us a little bit for the folks who don't know, just your background, kind of how you got there. I think it's a good story.
Yeah, I feel like I've had a career that's gone full circle. So I started off my career working for a large bank, supporting their client portfolio management team within the private
Yeah.
wealth business. About 20 years since then, I've served in a number of roles in investment groups, ranging from due diligence roles, portfolio manager roles. I was chief of staff to our chief investment officer. So lots of deep product experience, and then
Yeah.
started getting closer to distribution and leading our US capital markets team, our global capital markets team. And now I support our bank and institutional clients within our financial service advisor services division.
Well, so in doing all that, I mean, that's remarkable, right? It's great, but it's great to sort of see different parts of the company. But I know what people aren't seeing in that resume is that I know you have a lot of contact with advisors. I know that's a big part of what you try to do all the time. Tell me a little bit about, what you're hearing and then how you tried, from advisors directly and kind of how you're trying to take what you hear and help them at a real high level, because I think that's interesting.
Yeah, I think there's a bit of a tale of two advisors happening right now.
Yeah.
There are a lot of new entrants to the space as organizations are growing their wealth management teams, and the aging population has this higher demand for advice.
Yeah.
So, on this younger end of the spectrum, we see a lot of advisors thinking through practice management and
Mm.
differentiation. Whereas on the other end of that spectrum, we have the more tenured advisors who are thinking through generational wealth transfer, using new tools and technology, and the evolution of the role away from some of the sexy things that got them interested in the first place, which was investments and
Yeah.
asset allocation.
Yeah, interesting because it's funny when I hear you talk about that, as we gotten older in this business and we start doing the now all of a sudden we need maybe some of this new technology, and the younger people are good at the new technology but don't have the investment experience and vice versa, right? So
That's right.
it's a dichotomy.
That's right.
And you do a little bit to try to link those things.
Yeah, absolutely. I think we're talking a lot about AI now.
Yeah,
Everywhere you go, everyone's talking about AI.
yeah.
And I'd say early on it was scary in this community. So I think advisors were scared about, the robot coming and taking the cool aspects
Well,
of
we had
their
we had
jobs.
this notion of, there was robo advisor was before, which is something that didn't work. That just didn't, make
Yeah.
any sense. And then now it's coming again. And I think sometimes people's expectations are maybe even a little too much for AI. I mean, they're using it on a lot of the soft tissue stuff, the
Yeah.
marketing materials, prospecting, and sort of maybe waiting for applications that might work with investments. What are you seeing?
I see that, I mean, you're making the point of what I really see, and
Yeah,
that is humanity is the differentiator in the offer. So a
yeah,
lot of the robos got off to like a strong start early on, but I think what we're seeing now is more of this marriage of tools, technology, and humanity. So there's a
yeah,
lot of opportunity for advisors to think about their roles and how can these tools help me be more efficient
yeah.
in meaning that I can spend more time building emotional trust with my clients and supporting their planning process and thinking through behavioral coaching. So, leaning into more of these human elements that really differentiate the offers that advisors have.
Yeah, and they're being thrown AI from a whole bunch of different directions too. I mean, their firms and then I think clients have an expectation, but and are you hearing? I mean, I know Vanguard must be seeing, clients using it themselves. And where do you see that marriage of clients going out and using AI to try to get some advice versus, when do they need a real human being in there?
Yeah, I think an opportunity that clients have leaned in a lot on tools
Yeah.
is to support understanding all of the products that are in the market now. So I talked about early on in my career, some 20 years ago, there were less than 200 ETFs in the marketplace. And today there's almost 5,000. It's impossible to do
Yeah.
research and due diligence and understand 5,000 products. But a lot of these tools, like portfolio analytics tools or product tools, can help you look beyond maybe the headline and title of a
Yeah.
fund to see what's in it and how you can think about using it in a portfolio.
So So we talked about this a little, you and I, this proliferation of ETFs and some of the challenges around it. And you had mentioned some things that were interesting that, I guess I really wasn't thinking about. I knew it was there, but just how the labels of an ETF may be misleading sometimes and how not necessarily the underlying investment may not be the same. Let's talk a little bit about that.
Yeah, it's like it's the gift and the curse of the ETF rule. So back in December of 2019, some policy came into play where it's become a lot easier to launch an ETF product, which is great for clients. We want them to have more solutions and more opportunities to enhance their returns over time. But in turn, we've now seen, with 5,000 products on the market,
Yeah.
a lot of the good names get taken. So sometimes the labels of these funds aren't indicative of the underlying holdings. And so that's another reason for advisors to be thoughtful about looking through a portfolio to see what the holdings are, but also leveraging more generative AI tools to do that work for them.
Yeah. And obviously Vanguard has a position on this stuff, and I know you make an effort to try to make the drapes and the curtains match, but how does that work on your end?
Yeah, we've embraced a lot of the AI technology ourselves. We really, at the core of our organization, value deep relationships,
Yeah.
but we also realize that we want to help advisors be efficient with their time so that they can spend time with their clients. So,
Right.
one of the tools that we launched on our advisor website is a generative AI tool. Not everyone has time to read through a white paper or a commentary, especially as markets are moving and markets are dynamic. But what this technology does is allow you to customize a research piece for your client. So, depending on their level of sophistication, how long you want the article to be or the summary to be, so that you're able to provide these customized insights quickly. So, not only can you share your expertise and do that fast, but
Right.
also share it in a way that your client feels like it was created just for them.
Well, that's it. I mean, that's it. And that's like kind of a difference, to me, that's using AI as a tool. Whereas
Mm-hmm.
in my opinion, if you just put in a search for ETFs, if you're, just a person individual online, you know, AI tends to, go to the bottom or it gives you the consensus opinion on everything. So it doesn't give you
Yeah.
anything new or insightful, it
Mm-hmm.
just gives you this is kind of what the whole internet is saying. And I think that could be dangerous with investing at some point.
Yeah, I think a lot of these tools, it's an opportunity to test and learn. And so much of
Yeah.
what you get out of them is based off of what you put in. So, how do you think about the prompts that you're using and the questions that you're asking? And some tools even have a drop down that you can toggle to say, think deeper, so that you
Yeah.
can get like that look through and the layers of depth. But to your point, you have to be careful when you're using these things. There are some hallucinations that happen. So,
Right.
trust but verify until they continue to evolve to a place where there's some certainty around what you're getting out of the tools.
Yeah, and they're again to your initial point, they're more of a support tool than they can't be the end all,
Yeah, yeah.
be all. When you look at the folks that are using AI, do you see a generational difference? So do you see, because obviously our I hope it's getting a little bit younger, but it's been staying in this 55, 60-year-old, range. We're desperately trying to get new people in the business all the time. But are
Yeah.
you seeing there a difference in usage for AI, generationally?
I definitely say the uptake is higher on the younger end of the spectrum. But something that I see the most successful advisors doing, I was on a panel with an advisor a couple of months ago, and he's brought his son into his practice.
Yeah, you
So
see a
you talk
lot of
about
that.
like, yeah, it's great, like generational wealth transfer and not just having this one relationship across the relationship with one generation, but how can you meet a family where they are and bringing your family into part of that
Yeah,
process? It
yeah, yeah.
seems like something that the best advisors are doing in 2026.
It's interesting because I think if we turn this into a situation where our offices become more streamlined, we're using more AI, maybe that would attract younger people into the business
Yeah,
as well because they're comfortable, working on a screen, necessarily not as much in person. And that also the challenge is, our business is really an apprentice business. I mean, you
yeah,
have to really
yeah,
kind of get there to know it. And I think it works two ways with this sort of younger generation sort of teaching the older generation how to use some of these AI tools.
yeah.
So it really behooves advisors to try to find young people to come in the business and help
Totally
them.
agree. It's a two-way street. Like you said, we're used to more of the apprentice model, but I think there's
Yeah.
just as much that younger advisors coming into the community can help our more tenured advisors understand the evolving markets.
Absolutely. So that brings up another point, which is that advisors need to differentiate themselves somehow,
Yeah.
right? So it's becoming, we have limited ways that we can contact clients, right? So we have to sort of be careful about how we even, talk about what we do. So how are you seeing advisors use some of the tools that you have at Vanguard, specifically, to help differentiate themselves?
Yeah, I think a lot of what successful advisors are doing are really focusing on building emotional trust. And we've got
Yeah.
research that shows that that leads to the most client referrals, that leads to the most consistency, differentiation. It's really how much time are you able to spend with a client to support behavioral coaching. And I talked about a little bit this earlier. It's, asset allocation, portfolio construction were the thing for so long, and now that's
Yeah.
table stakes.
Yeah.
Everybody's doing that. So, what can you as an advisor bring to your clients that's unique? And that's where having a partner like Vanguard comes into play. So, we support clients with wealth management, with tax planning, estate planning, healthcare costs planning, um, thinking through, savings for their
Yeah.
children's education. And we talk a lot about like retirement savings, but retirement spending now is just as important.
Well, it's interesting because, look, when I got in the business was a long time ago, right? You're like 30 years ago or so. But the fact is, the firms used to do all that. I mean, you didn't look to, a money manager or asset manager to sort of help you with those things. They just
Yeah.
managed the
Yeah.
money. And the fact is that our business has, shifted, and it's now at this diaspora of guys. You used to have, 50 guys, you buy pizza, your wholesalers go in and buy,
Yeah.
20 pizzas
Yeah.
into an office where 100 people in there. And now there's 50 people in there, and the rest of them are spread around the city or spread around the suburbs. And it's hard for them to put all this stuff together. It's hard for them to find out ways
Yeah.
to help their clients, so they tend to rely now on the asset management firms.
Absolutely. You just helped me with some myth busting. I think Vanguard's really known for being a product provider. So
Yeah.
for a long time, it was just, equity index product. I think now we're known across asset classes and index and active. But beyond that, it's products and it's solutions and it's deepening relationships with our advisors to help them in delighting their clients.
Yeah, and in my mind, that's also the key going forward. Again, given the fact that our industry is spreading and it's moving more towards RIA, and the people are on their own, and I think they need help. Tell me a little bit on that note. I know you've got this analytics consulting stuff. Tell me. We talked about that, but tell everybody a little bit about that.
Yeah, so portfolio analytics and consulting is a team that we have here. Advisors can get support from the team directly if you need that like high touch service, or we have a tool on our website that pretty much does the same simulation. So you enter all the information that you have on a portfolio for a client. You can see where all of your exposures are, where your risk is, and determine if that's in line with what you want your
Yeah.
portfolio to look like and potentially suggest some changes that you could make to a portfolio to enhance it over time. And I would say something for us is, we're objective and we are a trusted advisor in this space. So we're not just going to offer up things that sit within our own product suite. We want to be fair and balanced. And again, put the client first to help the advisor best serve them.
Well, that's like Miracle on 34th Street when Santa Claus recommends Macy's going to Gimbel's, right?
Yeah.
Well, tell me a little bit. I mean, believe it or not, we're getting there. Tell me a little bit about where you see the industry going. Because what I like about where you're sitting is you get to talk to a lot of different advisors from a lot of different platforms, and you see and different levels of success or maturity or whatever. So where do you see all this going? And then I guess
Yeah.
ultimately you could say where's Vanguard's place in that, but where do you see it? Where do you see it going?
I think there's going to be continued focus on practice management, and that
Yeah,
really being the way that advisors differentiate their offer. Like you said, the asset allocation portfolio construction is table stakes, but
yeah.
what makes a client feel like their advisor cares for them, that they know them, and that they're putting their best interests at heart into the portfolio? So it's more of this relationship and understanding and expertise where I think You look back maybe 10, 15 years, and it was all about the expertise and the quantitative aspects of the role. Those things are still there, but advisors have to go above and beyond now because, like you said, there's competition out there.
Yeah.
And what can you do to differentiate yourself? It's really bringing that emotional trust to relationships with your clients.
And do you find advisors now, do you have to like present this stuff to them or are they bringing it up to you like, hey, we need this?
I think some of them are at the, hey, we need this. But I think there's still a lot of convincing
Yeah.
just because this was such a heavily quantitatively driven industry.
Yeah.
But I think what happens is when advisors start putting these things into practice and they see that they resonate so well with their clients, they come back and they want more, more, more. And we're happy to be a great partner for them.
And so where do you see Vanguard fitting in all that?
Yeah, I think we're at an exciting place right now where we continue to develop more offers and more solutions to support clients in their journey. But we also had an opportunity to build out our product suite in places where we didn't have product. And something that we're really focused on right now is democratizing products like active fixed income in the ETF wrapper. So I
Yeah.
think it's really exciting for us to not only be there to provide products, but also be a leader in AI, like I mentioned with the generative AI summaries for clients, continue to be a great partner to advisors on behavioral coaching and aspects of planning for portfolios where maybe advisors hadn't looked to us to be a partner in the past.
Yeah, well, obviously the future is going to continue. Look, I think advisors are going to continue to move and be more independent and even independent minded. And I think firms are going to have a lot more ways to affiliate with them. So some of those
Yeah,
affiliations will be more independent. And I think they're going to need partners out there,
agreed.
as they.
Partners, tools, and technology.
There we go. All right,
Yeah,
well, that's a high note. I'm going to leave it. I'm going to leave it at that. But that's really appreciate you spending time. And look, we can go do this again too as we go, especially if you have insights as some of this research that you guys are doing comes out. That'd be
absolutely. Absolutely. Would love to come back.
great.